I'm Charlotte McLeod with the Investing News Network, and here today with me is Stuart Englert, journalist and author of the book Rigged, Exposing the Largest Financial Fraud in History. Thank you so much for being here online with me today.
Thanks for the invitation, Charlotte, and thanks for inviting me on to Investing News Network.
Of course, and I'm excited to talk about your book with you today. Let's jump right into the questions. I think maybe you could start by giving me a sense of your background and how you came to write this book.
Absolutely. Well, I'm a journalist by trade, Charlotte. I worked on 3 daily newspapers and 2 national magazines before I started publishing books 7 years ago. Early in my career, I was an investigative reporter, and that's kind of how I approached the research on this book. You know, I've long been concerned about the national debt in the United States, and I always wondered how the federal government could continually spend more money than it collects in revenue. And about, I guess, 12 to 15 years ago, I ran across the Gold Antitrust Action Committee website. Are you familiar with GATA? Okay, well, for your viewers that are not, GATA was formed in 1999 by Bill Murphy and Chris Powell to expose market manipulation and suppression of gold and silver prices. And since I edit and publish books, I thought precious metal manipulation would be a great topic for a book. So about 2.5 years ago, I went to Chris Powell, who is GATA's Secretary Treasurer, and I asked him if he'd like to write the book and I would publish it for him. And he said he was busy at the time with their website and keeping up with their daily bulletins and dispatches. So in the fall of 2019, I had some time and I dove into GATA's online document archives. They're accessible to anybody that wants to look at them at gata.org. And I spent about 3 months poring over the documentary evidence and decided that I needed to write this book since the mainstream media really doesn't cover the subject at all. I wrote Rigged as a primer. I tried to avoid the complex issues and language and tried to write in language that everyone could understand, avoid the technical jargon as much as possible, or at least explain it. I believe everyone should know how our currency is devalued and manipulated. And I think our financial futures depend on it.
Right. And I read the book over the weekend. One thing I really liked is, as you said, it's very straightforward. Right away, you explain how the US government and banks are rigging gold and silver prices to defend the dollar. Then you go on to share how that happened. I don't think we have enough time today to go through the entire history, but I hoped you could pick out a few key events that you think are important for those who want to understand how we got here.
Yes, it's a big issue, and I hope people will read my book and get a better grasp of it. But, you know, governments and central banks long have set and controlled the price of money. And for most of history, money was gold and silver, precious metals. When nations were on the gold or silver standard, they set and controlled the price of those monetary metals. Now, after President Richard Nixon ended the international gold standard in 1971, it became necessary for the US government to control the price of gold to defend the US dollar and its role as the global reserve currency. Because gold is money and has been for 5,000 years, it's a competitor to the US dollar and all other currencies. So it became imperative to control the price, even though gold was no longer an official currency around the world. Initially, the Western central banks tried to control the gold price by selling metal into the market if the price rose above its officially set price. But in the last decade or so, they've largely abandoned large gold sales. In fact, central banks now are net purchasers or buyers of gold. Another pivotal date or year was 1974. That's the year gold future trading began on the COMEX commodity exchange. Today, the futures market is one of the primary methods used to rig and suppress precious metals prices.
Okay, so that's a great summary. as we've discussed, protection of the US dollar is key for the government, it's key for the banks. Right now, that protection seems especially difficult. One statistic that I've heard recently is something like 20% of all US dollars were created in 2020. So I wanted to ask you, what does precious metals price manipulation look like in the context of what's going on today?
Sure. Well, global money creation and debt expansion has been unprecedented in the last year. When I published the book last January, the US national debt was $23 trillion. Okay. Today it's 27.7 trillion, nearly $28 trillion and rising rapidly. We've never seen spending and debt accumulation like this before in all of history. I've read that the international debt is somewhere around $277 trillion, and it just keeps ballooning. And more money printing and deficit spending is on the way if you believe the politicians. Here in the United States, President Biden says he's going to do some more handouts and bailouts, and they're doing this to revive the economy, but it's having less and less of an effect. But anyway, all of this monetary expansion and debt accumulation should put a higher floor under the precious metals prices. Despite the manipulation, precious metal prices are rising and it appears that it's an organized retreat by the manipulators. Gold and silver rose 24% and 46% respectively last year, despite the manipulation. And the prices, I should say, manipulation continues today. We saw it last Friday with the short selling on the COMEX and the periodic price smashes. Gold was down $50 an ounce at one time last Friday, I think, and silver down $1.70 an ounce. We've seen these smashes time and time again in the last decade. And that to me is in your face a proof of price suppression and manipulation.
Right. And in the book, you, I think, very accurately say that although it's clear why precious metals prices are manipulated, it's much less clear how that happens. You take it down, you break it into sales, swaps, and leases, plus financial derivatives. Can you walk us through those methods and give us an idea of how that works?
Sure, Charlotte. Well, that's the monster topic here. And it's hard to put it in a few words, but I'll try and condense it down as best I can, and then hopefully people will read my book to get a better understanding. But the best description of price manipulation I've read was offered by economic and investment advisor Frank Venerosa at GATA's conference in South Africa in 2001. Now it's a convoluted process, so bear with me. I'm going to read an excerpt from my book. And by the way, the complexity and concealment are among the reasons that the manipulation consists, or persists, I should say. So here's what Venerosa said. He said, central banks generate income by leasing gold to the bullion banks. The bullion banks, in turn, sell the metal for cash and buy investments that earn a higher rate of return than the interest they pay on the borrowed gold. The problem here is the bullion banks can't return the gold unless they buy the metal back. So they hedge their risk by trading financial derivatives on the futures market and manipulate the gold price. Now, if Venerosa's theory is correct, then the central banks don't possess all of the gold they claim to have stored in their vaults, which would help explain why they prefer to keep their gold leases and swaps confidential. Financial derivatives, by the way, involve trading paper contracts, okay, and megatons of imaginary metal. During a 2010 CFTC hearing, that's the Commodity Futures Trading Commission, a precious metal expert, Jeffrey Christian, testified that precious metals, and this is a quote, trade in the multiples of 100 times the underlying physical metal. Okay. So in other words, prices are manipulated and suppressed, and I should say prices are manipulated and suppressed with bets placed on tons of imaginary or non-existent metal. More imaginary gold and silver is traded in a few days than is mined in an entire year. Such large-scale trading is at the heart of the price suppression scheme. The scheme creates an illusion of supply, okay, allowing precious metal prices to be manipulated lower, even if physical demand is rising. Does that make sense?
Yeah, I think that's a good way to break it down. And one of the things I found is interesting, even though there's these large numbers going on, big things happening, there's a huge lack of awareness about precious metals price manipulation, as you point out. And even among those who have heard of it, there's a pretty high degree of skepticism. What would you say is the main argument you hear about why price manipulation isn't real, and how would you counter that?
Sure. Well, I've run into some of that skepticism, with the publication of my book, and there are some skeptics out there who maintain that there's no precious metals manipulation. It's a myth or a conspiracy theory. But that number is rapidly decreasing, at least among people in the know in the metal sector. What's worse than the skepticism, though, is the fact that the subject is taboo or verboten among most politicians and the mainstream media. They avoid it like the plague. I was somewhat skeptical myself about writing this book because of the naysayers and the pushback I would get. But once I read the documentary evidence, there was no doubt that the skeptics were wrong. And I found as much conspiracy as theory, probably more conspiracy. So I've had a few people dispute my findings, but what I discovered is they hadn't read the book. One argued no one had ever made a dime claiming precious metal prices are suppressed. I found that a very odd argument against price manipulation. Another said if prices were manipulated, they'd be manipulated higher rather than lower. I was dumbfounded or miffed by that suggestion, but not completely surprised by the lack of knowledge about the monetary system. Today it's much harder to deny gold and silver prices are manipulated. A federal prosecutor in 2019 described J.P. Morgan Chase as a criminal enterprise for manipulating gold and silver prices and markets. And last September, the US Department of Justice assessed a $920 million fine against JP Morgan, which is the nation's largest bank, after JP Morgan admitted that its traders manipulated precious metal markets between 2008 and 2016. Some of the world's biggest banks have been fined hundreds of billions of dollars over the last 20 years for rigging bond prices, interest rates, and foreign exchange markets. So why would anyone think they wouldn't rig precious metal prices and markets? Sadly, these billion-dollar fines are a cost of doing business for the too big to fail banks. These banks earn trillions of dollars by manipulating markets, and the criminal enterprises remain in business. The government doesn't shut them down because they're doing their job defending the dollar, the US dollar, as an international currency. GATA and my book have helped to quell some of that skepticism and expose the fraud. RIG, by the way, has been sold across the United States and in 10 foreign countries. People in Germany and India and Japan want to learn about this. And the cynics can't debunk the 59 documentary citations in the book's endnotes at the end of the book. And anybody can reference those and do their own research and confirm what I'm saying in the book.
All right. One thing that I also found very interesting about the book was that you bring up the role of precious metals mining companies. For me, the takeaway was that for the most part, they don't talk about price manipulation, and in general, they're not taking any action against it. So I want to ask why you think that is, and perhaps what do you think they should do?
Sure. Yeah, that's a touchy subject. Um, you are right. Most mining officials and executives are reluctant to talk about market manipulation, even though it directly affects their business. A few have spoken out. Keith Newmeyer of First Majestic Silver and refinery consultant Corey Keller of Keller Gold Consulting are a few, but they're a rare breed. The reluctance of mining execs is likely to their business ties, permitting requirements, and funding needs. Corporate CEOs in general are a conservative lot. Most don't rock the establishment boat, for fear of putting their company in a negative light. When it comes to resource extraction, mining companies receive their environmental and regulatory permits from government agencies. Second, they receive much of their funding from some of the same mega banks that manipulate the precious metal markets. Sure, you're right. They could do more. They could be more vocal about price suppression and manipulation, but I understand why there aren't. They don't speak out for the same reason most people hold their tongue. Job security and business and business ties and interests, I guess you could say. It's kind of a double-edged sword. Mining execs don't speak out because they don't want to harm or jeopardize their business, while at the same time, they greatly reduce their profit potential by remaining silent. So it's a double-edged sword as I see it.
Those are some great points. As we're getting close to the end here, I think two questions I'm sure anybody who's looked into this situation would have are how does precious metals price manipulation end, and when does that happen? My sense is that definitely it's much easier to answer the how than the when. Could you go into that for us a little bit?
Well, you're right, Charlotte. Those are the big questions, and they're multi-million-dollar questions. Unfortunately, I'm not a prognosticator, and I have to be frank. I don't know when those things occur. I predicted the money magicians and manipulators would run out of tricks 8 years ago. I was predicting that they couldn't push this beyond 2012, I guess it was. But I do know that our bond and equity markets, once again, are in bubble territory, okay? And the monetary system is showing cracks and signs of stress, thanks to this debt tsunami that's being unleashed around the world. But a major change worth noting occurred last year. Before last March, most gold and silver contracts on the COMEX were settled in cash rather than physical metal. Beginning last spring, traders began demanding more physical deliveries than ever before. About 780 metric tons of gold were delivered on the COMEX in 2020, and that's nearly a fourfold increase over the prior year. Likewise, with silver, in 2020, nearly 300 million ounces were delivered, and that's up 73% from the previous year. If this trend continues, the exchange could have difficulty finding metal for future delivery, at least at the current prices. To meet delivery demand, the United States imported a record amount of gold in 2020. Through September of last year alone, 608 tons of gold were imported into the United States. During the height of this gold rush last spring, gold imports outpaced the value of computers, if you can believe that. If the COMEX ever fails to meet these physical delivery demands, precious metal prices will do a moonshot. that's one way the price manipulation could end. We could also see a new price fixing paradigm, if you will. And that would happen if a nation such as China or a group of central banks ever decide to peg or back their currencies with gold. If that happens, they would set the price, and it would likely be multiples higher than it is today, thereby ending the price suppression scheme by the Western central and bullion banks. Could this happen? Will this happen? When will this happen? Your guess is as good as mine, Charlotte, but it is possible. And the possibility grows with the increasing fragility of the financial and monetary system.
Okay, well, definitely those are some points for us to think about. I want to end with a question that keeps our investor audience here in mind, which is what should the action plan be for somebody who's read your book, they feel they understand the situation? What do they do now?
Yeah, that's a very basic question, and one I ask myself every day. I'm not a financial advisor. I'm a journalist by trade. And what I tell everybody is that every person must assess his or her own financial situation, their goals, and assess their risks. I think it's incumbent upon all of us to educate ourselves, to read and learn about monetary history, and to realize and accept that our debt-based financial system is fraught with fraud. In many ways, our debt-driven economy is an illusion, while physical precious metals are a tangible asset, something that you can hold in your hand. Personally, I view physical precious metals as insurance rather than an investment. The primary reason for holding or owning precious metals is wealth preservation in a time of currency debasement. And that's what we've got going on now, currency debasement. Each of us must assess whether precious metals should be part of our financial portfolios. And if so, in what proportion? So I think it's a matter of self-study and evaluation. And the bottom line is the majority of the people have no clue what the actual price of gold and silver are, much less the fact that it's manipulated.
All right. Well, I think those are some good words for us to close on. Thank you so much for joining me today to discuss your book. It was great to hear your thoughts.
Thank you so much, Charlotte, and best to you.
Of course. And once again, I'm Charlotte McLeod with the Investing is Now Network, and this is Stuart Englert, author of the book Rigged.